Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer: nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Precipitate Gold, a mineral exploration company focused on exploring and advancing its mineral property interests in the Dominican Republic. It's Jeff Wilson. Great to have you on the show.
Thanks for having me, Jesse. I appreciate it.
Yeah, I want to start off with the macro overview of gold before we dive into Precipitate specifically. So I'm wondering from your perspective what the main themes and trends are that you're currently following in the gold sector that you think more investors and stackers should be paying attention to.
Yeah, obviously, these are incredibly compelling times in the world of gold. Those of us who have been in the space, in the metal space, but specifically the precious metal space for, well, decades, actually, for myself, are really finding this to be quite an interesting and compelling time. First of all, you've got gold prices soaring at all-time highs, continuing to sort of move in that direction. Oftentimes in gold, we've seen these sort of peaks and valleys where gold will sort of push these highs and then it sort of settles back down. And a lot of us are kind of used to over the last few years, sort of a $1,200 or $1,500 or $1,400 gold price, and here we are at $3,200, $3,300 gold US. So it's a very compelling time in the precious metals and gold space, and I think there's some driving factors to that I think are fueling that. And obviously, a lot of political or geopolitical events that are happening around the globe right now are certainly playing into that, I would think. You've got, geopolitical tensions, you've got trade war issues, you've got inflationary or stagflationary sort of concerns and issues. And you're seeing central banks. I mean, this is the part that's quite interesting to me, and maybe we'll talk something later about. But the fact that central banks continue to buy, in spite of the fact that we're seeing gold trading at all-time highs. And so I think all of this is creating a foundation or a platform here for the gold sector to really benefit. And we're seeing that, quite frankly, a lot of that, the impact of what we're seeing in the gold space is not yet reflected in a lot of the equities, certainly not the junior equities. So I do think that we're in an interesting time for investors and stackers to be, contemplating and considering the gold space if they aren't already.
Yeah, and I think we are on the cusp of a massive bull market when it comes to the gold mining stocks as well. We're going to get to that in a moment. I do want to pull on the thread you mentioned regarding central bank gold buying, because they've been buying at a pace exceeding 1,000 tons annually for the past 3 years. The decade prior, the average was 400 to 500 tons, so double. And the World Gold Council recently released their Central Bank Gold Reserves Survey 2025. And this is a quote from it. It says, similar to findings from previous surveys, central banks continue to hold favorable expectations on gold. Respondents overwhelmingly 95% believe that global central bank gold reserves will increase over the next 12 months. As you mentioned, this is despite being at all-time highs. What do you make of this aggressive outlook from central banks, and how much do you think central bank gold buying drives the gold market?
I do think it's a driver. I do think definitely, that kind of buying on what is really, quite frankly, a pretty skinny market in comparison to a lot of other sectors and spaces, for investment dollars. So I do think that central bank buying is a significant factor, and I think it's a telling factor. And I think that it's something that investors, general investors, retail investors, should be looking at, and I think should be encouraged by in the current environment. Why are central banks doing this kind of buying in an environment where, again, the investment that they're investing in is trading at an all-time high? I think that's curious, but I do think that there's rationale for it. And I think that, my take on that is it's a lot of different factors, and I think, but one of them for sure is an increasing uncertainty with the US dollar. I mean, this constant sort of anchor of the financial markets of the US dollar is suddenly put itself in a position where I think a lot of central banks and foreign jurisdictions are looking to diversify away from that. It's not as certain as it used to be in the past. And I think it's also a sign of uncertainty with fiat currency. I mean, we in the gold space, I think, have been talking about that for a long time, about fiat currency and the instability of that versus a hard asset such as gold. But I think you're starting to see central banks recognizing that that fear or that concern, and utilizing, tried and true hard asset that is an offset to these fiat currencies, which is gold. And so I think, as you said, seeing that in an environment where gold is trading at such high levels, yet this is still a highly sought after commodity for these central banks, I think, again, is telling, if not more than telling, that this is an opportunity, as you mentioned, at what could be a long-standing bull market for the gold space.
You mentioned the US dollar there. It has been showing weakness recently, with the DXY being down around 10% year to date. You mentioned fiat currencies in general there as well. Is the dollar still the cleanest dirty shirt in the laundry pile of fiat currencies? And is it starting to lose its relevance at all in the global monetary system?
Yeah, I'm reluctant to say that, in the global monetary system, people are going to completely turn their back on the U.S. dollar. I just, I think that would be a slow process, and I don't see that happening overnight. I do see, however, what we are seeing now is indications of uncertainty, indications of fear, and as a first step, I think what you're seeing is diversity. So, we can't rely upon the U.S. dollar as, the stable currency that it once was. And I think that even that glimmer of uncertainty is forcing central banks, other investors, to look at diversifying away from that. Like I said, I don't see that as an instantaneous pivot where people suddenly run away from the U.S. dollar. I don't see that. I think people are always going to have some exposure to that, in the belief that the U.S. economy and currency comes back around or rebounds, or that there's some sort of political change. But for now, yeah, I think it is raising questions. And again, investors are being savvy and wise, I think, in not putting all their eggs in that basket. We'll see how that plays out over the course of the next few months and years, I suppose. But I think just that slight concern is creating opportunities in other spaces for those investment dollars to focus on.
Well, let's talk about the gold mining sector. For a while, for the past few years, the talk was, why aren't the miners surpassing the gold price on a percentage basis? Because generally speaking, they're a levered play on the gold price. That wasn't coming to fruition. However, it seems like the miners have started to wake up. Year to date, both the GDX and especially the GDXJ ETFs are outperforming gold by a fairly significant margin. Do you see this as the start of a secular trend in the gold miners? And if so, how high and how far could you see this bull market going?
I do see it as a not only as an important indicator of sort of where the equity side may be headed, but I think it's a tried and true sort of indicator. I mean, we've seen this historically in the past, where gold starts to move, and the impact makes its way to let's be honest, we're in a risky business. Commodities can fluctuate in terms of their value, supply demand issues, and so the equities obviously are impacted by that uncertainty and that risk. So when you start to see, there's a lot of different risks. There's commodity risk as a first layer, then there's geopolitical risk, there's market risk, there's all these different risks. And when you see one of those risk concerns sort of ticked off the box, as it's not a concern anymore, then you gradually start to see some movement. I think what we're seeing now is that, when gold goes from 1,200 or 1,800 to 2,200, 2,500, I think people start to say, maybe there's a bit of commodity risk here, because I don't know if gold is going to continue to go up. And so, people are sort of, well, I don't know that I want to load up on gold equities at this moment. What we're seeing now is, I think, commodity risk is being sort of taken off the table here, and now people are starting to put their money back into the equity. So you traditionally start with the ETFs, because it's the safest, quote unquote safest, least risky route to get exposure to gold. Or gold itself, but then when that gets too expensive, what do you find that you can find, that's maybe not as priced in as gold is? Okay, the ETFs. And then you make your way down to the majors, if they haven't yet had a reflection in their balance sheets of, their operating costs versus the commodity price and the margins that they're getting. And I think we're just starting to see, maybe over the course of the last 6 to 8 months, where we're starting to see financial reporting from producers and major companies that recognizes that these new margins are in fact creating increased cash flow and better operating margins for the producers. My expectation would be that you start to see that stuff funnel its way down to the developers and the explorers. So, it's not a surprise to me that, we're starting to see that in the ETFs as kind of an initial foray into the gold space. But again, I think people traditionally start to have higher risk tolerance as the commodity risk is eliminated, and therefore people start to come a little further down the pecking order. And I think that we're starting to see that, quite frankly, now, where in my experience over the course of the last 6 or 8 months, I've seen more private placements and financings done in the junior space than I had seen probably in the 5 years preceding that, because I think investors are starting to see that opportunity. Prices are low and depressed, and so you're starting to see that money move back into the sector. And again, I think it is the start of what could be quite a run in the space for the equities, because again, they need money to be able to do work. Work generates results. Results generate news, and that's what drives the equities to move forward.
Well, let's discuss how Precipitate Gold fits into the picture. Could you start off by giving us an overview of the company?
Certainly. Precipitate Gold is a junior exploration company. We are focused in the Dominican Republic, a jurisdiction that is possibly not particularly well known to the investment community for its mining track record, but it is a country that has a long mining history, and in fact hosts one of the largest gold mining operations in Latin America, and that's a project called the Pueblo Viejo mine, which is operated by Barrick Gold. So this is a country that we came into back in 2012 on the back of a what I would consider to be quite a substantial discovery made by a company called Gold Quest back in 2012. And we were able to come in and pick up ground immediately adjacent to Gold Quest's project, and pick up quite a sizable land package, very underexplored, very early stage, but the right geological affinities similar to that of Gold Quest. And we've been operating there since 2012 with various stages of exploration and drilling. In the interim, we also picked up some additional projects in the Dominican Republic, because that is our focus, including a project that is immediately adjacent to Barrick's Pueblo Viejo that I mentioned at the beginning, this world-class mining operation. We sort of surround that mining operation on 3 sides, right up against their claim boundary. That's a project that we've held since 2018. That was part of an earn-in agreement with Barrick, where they spent $7 million over 5 years there. We've recently retained that project back 100% and are looking at how we might be able to follow up on Barrick's work with perhaps some targets that maybe didn't meet their world-class threshold, but maybe worth pursuing for a company like Precipitate. So a number of different projects in country, and we're well-financed. We've got about $4 million in the treasury. We haven't done a financing since 2021. So we've been well-financed, not particularly dilutive in these difficult markets over the last couple of years, and we own all of our projects 100%. So we think we're in a good position here to start to ratchet up our work programs and deploy some of this capital into meaningful exploration.
Talk to us about the Dominican Republic as a jurisdiction and how Precipitate Gold's relationship is with the local government and community. Are they supportive of your projects there? Is there any political risk that you see? Because investors sometimes get wary about jurisdictions they're not aware of. As you mentioned, Dominican Republic, not on everybody's radars here. And there has been some negative press surrounding some South American countries, obviously some countries in Africa. So how is the Dominican Republic as a jurisdiction?
I think it would be naive to say that any jurisdiction, maybe short of Nevada, is free of any sort of political or community issues that have to be dealt with. So the Dominican Republic is no different. There have been some elevated concerns with respect to our neighbor Gold Quest as they are going through the development stage of their asset and trying to move that from exploration to exploitation. And so you've got some people who don't like the idea of a mining operation in their backyard. And I don't think that that's a Dominican Republic, in my opinion, a Dominican Republic problem. In my opinion, it's not dissimilar to, trying to build a pipeline in parts of Canada or other parts of the world. There's going to be some concerns. You have to address those community concerns and work collaboratively with the locals. So I think the Dominican Republic's government has shown a strong desire to support mining. They've been very strong on foreign investment. They recognize that tourism is a big part of their economy. Tourism needs a couple of other sort of legs to the stool to really be able to sort of hold up that economy through, as we saw in the Dominican Republic, things like the COVID pandemic, where you had to rely on other parts of the economy, and gold exports were a big part of that. And gold exports, because of Barracks Pueblo Viejo, are a big important component of the Dominican Republic's economy. So all that said, we are working in an area adjacent to a company that is advancing a project toward production. So there are some concerns that have to be worked through with the locals. We've not had any problems ourselves at the exploration stage. We do engage quite consistently with local communities that we work in and out of. We obviously try to hire local and make sure that we're a part of the community. But I think the Dominican Republic has turned a corner over the course of the last 8 months or so with a couple of decisions that they've made, policy decisions and changes that they've made to help to improve the process for exploration and development stage companies. We've been working quite closely and collaboratively with the government, with both the mining department as well as the Ministry of Mines and the Minister of Mines himself. And I think that they are trying to advance mineral exploration to become a more important, and mining to become a more important part of their economy. All of that said, politicians have one primary objective, and that is to remain popular. So we have to also keep in mind that part of the onus is on us as an industry to try to educate people, educate the citizens of the country to better understand what it is we really do, how we can benefit them, and make sure that, when the time comes for permits to be granted and ribbons to be cut, that, local people see that as an advantageous thing versus a negative. And so that is something that we're working with the government to try to help make sure that people understand what it is we do and how we can hopefully benefit all stakeholders.
You recently announced results from trench sampling at the Juan De Herrera project. Can you walk us through those results and what they mean for the company moving forward?
That's been an interesting progression over the course of the last almost year now, whereby, when there was some political uncertainty and some community uncertainty for our neighbors, we, and that being Gold Quest, we sort of made almost a joint decision as two companies to sort of put on the brakes in terms of spending money and doing work until we had a little bit more clarity of the path forward. My line has always been, what's the point of finding more gold if the guys who have already found it can't get it out of the ground? And so we sort of decided to just sort of pause our exploration work and did work on other projects in other parts of the country and other parts of the world. But before we sort of shut down our work programs there, we did a very extensive sampling program, basically almost throughout the entire project. We collected over 18,000 individual soil samples as a last gasp before we sort of sent everybody home. Those samples they were prioritized. We did some XRF scanning. We had an idea of which were, sort of prioritized as maybe the most interesting or not, but we never submitted those to the lab. So for analysis. So when back in summer of last year, when we started to see that the government and sort of the political will was starting to come back in favor for mining, and that our neighbors were going to be able to move things forward, we thought, okay, we've got all these samples, let's get this stuff in the lab and start to kickstart, where we really want to be on the project. From that, we delineated 8 new mineralized zones that we otherwise had never really known about on the property. That sort of kick-started us to go back to each of those zones and start to do more detailed follow-up work, sampling, mapping, and in certain cases, trenching. And the CN zone, as you mentioned, is one of the zones that's really emerged with some quite elevated gold values from both our sampling, surface sampling and trench sampling. Including a soil sample a rock sample that ran over 76 grams per ton gold, which was the highest individual sample of gold anywhere in that district, including our neighbors who have, nearly 4 million ounces gold equivalent on their project. So there's something going on in the CN zone that we're quite intrigued by, and that's brought us to do quite a systematic progression of trenching. Some of those trenches have yielded admittedly relatively narrow sort of spaces of mineralization, but getting, again, quite elevated mineralization in these trenches. And this trench sort of structure that we've trenched runs, several 100 meters and is sort of open to the south. And so this is one of a number of different zones within the project where we've seen both highly elevated either gold or in some cases copper values from sampling and trenching. But we're also now starting to see some interesting geophysical characteristics in some of these zones. And that geophysics, specifically induced polarization or IP, trying to get a chargeable response, has really been an important tool in this region for all companies. And so we see our exploration as sort of a series of layers. You start with, are you seeing anything at surface? Okay, let's do more detailed surface sampling. We're getting, a broad anomaly here. Let's vector in on that with some trenching. Let's come back and do some geophysics. And that typically is a key indicator for whether or not a target is worthy of a drill program. And we're sort of advancing toward that stage now on a couple of different target areas with current geophysics underway. We started a geophysical program in June. That program will run probably till the end of July, maybe into the middle of August. And there'll be some time for interpretation and understanding of those results. But that should put us on a path to sort of identify which of these zones has that additional layer of intrigue from the geophysical surveying that points us in the direction of perhaps looking to drill it.
You mentioned you have cash in the treasury. How do you plan to put that cash to work? You also mentioned that you haven't been very dilutive in these current times. Do you see the need to potentially dilute up ahead to raise capital? How would you plan to raise more capital after you've gone through what's currently in the treasury?
Yes, I never, I'm one of these guys that, you never say never sort of thing. So yes, we have a significant treasury in hand now. I think that the money that we have in the treasury could see us through at least one phase of drilling and perhaps beyond without sort of the need for raising more money. But I'm also cognizant of the fact that, needing money is one thing. Who is it that you're taking money from, and thereby who becomes a shareholder of your company? And I think sometimes that's as important as the dilution, is where are these shares now being held. So if it were an investment from the right group or groups, if it had a purpose in terms of sort of, okay, we're going to really ratchet up here with drilling of maybe multiple targets, and rather than drilling one and sort of depleting the treasury, and the market gets a little concerned that you've got a financial weakness and it becomes a little bit more challenging to raise money, there could be an argument to be made that, look, maybe if there's interest, if there's appetite, if some of the results we do over the next few months generate some interest, perhaps the share price responds and some people want to participate, I might consider topping up the treasury just to bolster our position of financial strength. But it's very nice to be in a position where that's discretionary, and we are not in a position where we're being backed into a corner, and the clock is ticking, and you need to raise money to do anything. So we can be dynamic on that, and we can sort of see how things play out. And if we think it's the right time with the right investors, we could consider it. If we think we've got a better shot at, getting some drills turning and trying to get some results into the market that maybe elevate the share price and look at a financing, then obviously that would be something we can consider as well. So yeah, and again, we're not we don't have an overhang of there's no warrants outstanding on the company because we haven't done a financing for some time. So again, you don't have some of these perceived overhangs of of warrants that may be exercised at X price or whatever. So and we've seen the share price respond quite favorably. Earlier in the year, we got up to, maybe double the price that we are now, based off of, sort of there was a little bit of rising tide with some of our neighbors and kind of the sector, and some good news that had come out of the Dominican government. But I think with more exploration results that we're currently working on, and maybe a little bit more of certainty for the investment community to understand kind of where we're going with respect to drilling and timing of that drilling, I think we might start to see a little bit more, firming up of the equity side of things, and maybe at that point we can look at what makes sense from a financing standpoint.
Is there anything we haven't yet covered about Precipitate, or anything you think it's important to emphasize about the company to potential shareholders?
No, I think we've covered the key points. I think, one of the other things is we do have, a real focus on our Juan De Herrera project, which is next to Gold Quest, and that's a project I've been talking about. But we do have a little diversity within country. We've got 2 other projects that are drill permitted, have highly prospective targets within them. And so the ability for us to sort of increase our activity beyond just the Juan De Herrera is certainly something that we have at our disposal. Again, I'm reluctant to get distracted by being, too many places at once. And right now, the Juan De Herrera has ample targets. It's permitted in many cases, and the targets are really sort of speaking to us. So we'll stay focused there. But we're not a one-trick pony. And again, I think that, what I'm hearing from a lot of people who have been watching the story over several years is that, some of what's happening with our neighbor, Gold Quest, and their progression. I mean, this is a company that share price has gone from, 10 cents to 80 cents over the course of the last 12 to sort of 18 months, driven largely by, positive information coming out of the government, positive information with respect to new investors and strategic investors that have come into that story. And I think that's creating a renewed interest and confidence in the Dominican Republic. And so as a company that is still, sort of in the sub $20 million market cap category, being Precipitate, seeing that kind of exponential growth from our neighbors, I think is drawing some investors to take a look at, what else is out there that hasn't already moved to that extent, and where might there be some upside. And I think we may have some leverage to that as well. So again, it'll be contingent upon positive exploration results and continued support from the Dominican government and local communities. We'll have to be sensitive to that. But I think we're in a good spot here with respect to moving things forward, and it might be a very interesting entry point for investors to consider.
Great. Well, I'll put a link in the description below to the Precipitate Gold website, as well as social media for people who want to follow along with the company. Jeff, it's been a fantastic conversation. Thank you so much for coming on.
Thanks, Jesse. Really appreciate it. Thanks.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.